So, small cap stocks. You've probably heard the buzz, right? They're often painted as these high flyers of the market, just packed with incredible growth potential. But there's another side to that coin, and it's their reputation for some pretty intense volatility. Today, we're going to break down exactly what makes these stocks swing so wildly, and maybe more importantly, how you can prepare for the ride. And honestly, that's the perfect metaphor. One minute you are just climbing and climbing, feeling that excitement of a potential huge win, and the next, bam, you're hit with this stomach-churning drop that feels like it came from absolutely nowhere. It's a real mix of thrill and, let's be real, a little bit of terror. Okay, so let's get into it. What are the actual mechanics behind this roller coaster? I mean, why do these smaller companies react so dramatically to a piece of news that a bigger company might just shrug off? That is exactly what we are going to unpack right now. To really get a handle on the ride, first we have to understand the machine itself. So let's pop the hood and take a look at the fundamental design of a small cap company. What makes it tick? And more to the point, what makes it so prone to these sudden, jarring movements? First things first, just a quick baseline so we're all on the same page. When we say small cap, we're simply talking about a public company with a lower total market value, what's called market capitalization, than its bigger siblings. We're not talking about corporate giants here. These are often the innovators, the niche players, the ones still very much in their growth phase. So let's see how each of these things really fuels that roller coaster feeling. Look, being new and laser-focused on just one product is fantastic for explosive growth, but it also means there's less of a safety net. A single setback can have a massive impact. They also haven't had time to build up huge cash reserves, so big economic shifts, they get hit way harder. And pay really close attention to that last point, smaller trading volumes. That is a huge piece of the puzzle, and we'll come back to it. And on top of all that, you have fewer Wall Street analysts actually covering these companies. What that means is the market has a much harder time figuring out what the right price for the stock even is, a process we call price discovery. So when new information does finally come out, whether it's good or bad, it can catch the market completely off guard. And that's what leads to those really sharp, really unpredictable price swings. So we've had a look under the hood. Now, let's talk about the actual forces out there on the track that make this ride so incredibly wild. These are the four big drivers. You can think of them as the operators of our roller coaster. You've got public opinion, or sentiment, the raw mechanics of trading, rule changes coming from the government, and of course, unexpected news coming directly from the company itself. Let's break a couple of these down. This is a brilliant way to see the different forces at play. On one hand, you have market sentiment. This is the emotional side, the human element. A rumor, a viral tweet, some glowing news article, it can send a stock soaring or sinking based on pure hype. But on the other side, you have liquidity challenges, and this is all about mechanics. With fewer shares being traded back and forth, a single large buy or sell order can dramatically move the price just because there isn't enough opposing volume to absorb it. Let's use a real-world example to see how this plays out. Picture a small battery metals company. They announce they've just landed a huge supply agreement with an EV parts maker. I mean, fantastic news, right? The market thinks so too, and investors just rush in, sending that stock price way up. This is the fun part of the ride. But then, just a couple of weeks later, news breaks. One of their key mining permits is suddenly under review by a government agency. Uh-oh. All those future earnings that everyone just priced in are now completely uncertain. This triggers a wave of heavy selling, and the stock takes a nosedive, wiping out all those recent gains. It's a perfect storm of company news and regulatory uncertainty. And here is the real lesson from that story. The volatility wasn't just about the news itself. It was about the speed and the sheer intensity of how investors reacted. In the world of small caps, fear and excitement can be just as powerful, if not more so, than the numbers on a balance sheet. Now I know, hearing all of this might feel a little daunting, but don't worry. This next section is all about your safety harness. These are the strategies you can use to navigate all this volatility with a lot more confidence. Okay, let's walk through these 5 because they're super important. Number 1, and this might be the most crucial, stick with what you actually understand. Don't chase the hype into a business you haven't researched. Second, keep an eye on that trading volume we talked about. It's a huge tell for liquidity. Third, track what people are saying. Know what the chatter is online and in the news. Fourth, spread your risk. Diversification is your absolute best friend here. And finally, use solid market intelligence to separate the real signals from all the noise. This slide really just boils it all down nicely. You want to be focusing on the things that build a solid foundation. Consistent trading, doing deep research, looking at strong company fundamentals. And you want to be really wary of those emotional traps. Social media hype, putting all your eggs in one basket, and just blindly following the crowd. So after looking at the machine, the forces pushing it around, and the safety gear you can use, we get to the big picture. You see, volatility isn't really a flaw in small cap stocks. It's a fundamental feature. It's actually part of the package that also includes that incredible growth potential. And this quote just captures it perfectly. You're not on the scenic route anymore. You're in the fast lane. The speed can be totally exhilarating, and the progress can be super rapid, but it also demands more focus, a lot more awareness, and a really clear understanding of the road ahead. Which brings us right to the final question, and it's a question that only you can answer. Now that you have a much better handle on the mechanics behind the roller coaster, why it climbs so high and why it can drop so fast, you can make a much more informed decision. Is the thrill of that potential reward worth the inherent risk of the ride,